Monthly market snapshot today. What is going on in this never boring real estate market that we find ourselves in? I'm Jessica Janung with Real Broker. This is my husband, Chris, and we're going to give you a real estate market update. Let's start with real estate market news. Starting with the job market, we just got a pretty bad jobs report, quite frankly. Let's start with this CNN article. America's job market flashes yet another warning sign about the economy. So we have more bad news in the jobs market, which has been pretty consistent over the last few months. We've had bad jobs reports.
But the good news about bad news in jobs and economic data is that it just sort of leads to more support for that rate cut that we've all been hoping for and waiting for quarters and quarters and years now.
Mm-hmm. That is true. Bad economic news, bad jobs news normally means good news for mortgage rates. It's kind of counterintuitive, but that's how it works. Labor market deterioration, just 22,000 jobs were added in August, dramatically lower than economists expected, which was 76,500 new roles. So yeah, that is anemic. And just imagine if that 22,000 gets revised lower, like the last several months of jobs reports got revised lower. It was like over 200,000 jobs or something.
And
it was
that June number is apparently
revision.
Negative now. So that's what that negative job growth for the first time in 4 years, lost jobs with the decline of 13,000 in June. That's the revision to that month of June data.
Yeah, they are doing further revisions, and this is the first job revision that has gone negative month over month, this June revision, since COVID, I heard, the end of 2020. Yeah, December of 2020 was the last time we saw a negative jobs month. So big news in jobs currently. That's leading to rising unemployment, of course. The jobless rate rose to 4.3%, the highest level since 2021. While unemployment is increasing, 4.3% is still quite low, and we have had, since the COVID years, historically low unemployment.
Yeah, I think 4.3 was up from 4.2.
Mm-hmm. Yeah. Let's move on to mortgage rates, because as we said, bad jobs report normally is good for mortgage rates, and mortgage rates, according to the CNBC article and every other news outlet out there and everything on my feed right now, mortgage rates see biggest one-day drop in over a year. CNBC says the average rate on the 30-year fixed mortgage dropped 16 basis points to 6.29% on Friday. This is a major change from May, when the rate on the 30-year fixed peak was at 7.08%. So mortgage rates are falling pretty drastically, as we saw in our email from our lender every week. Gives us at least a once weekly email of where mortgage rates are, and we got that today, and I was surprised to see how low they were.
We'll do the mortgage rate overview just like I did last month. I'll show this slide where we've got the different loan types: FHA, VA, conventional, and jumbo. We'll have the sample purchase price on there again, but just quickly go over it. We'll do the rate conventional at 5.99, so that's crossing that 6% rate point that we've been talking about anytime we get into the fives, so we think that that's really good.
I've not seen conventional 5.99 since maybe the end of 2022, when rates started to trend back down for like a minute after going up. That was probably the last time. So it's been years. I was surprised. I've seen some FHA and VA in the fives, but conventional to have a 5 in front of it, that's news.
Other than in the new construction, right? So this is resale mortgage rates for and even refinances.
Yeah, and only reason why they're lower sometimes in new construction is just because the builder is buying down a ton in points, like this 5.99% rate that our lender had, which he, by the way, is often much lower than most mortgage brokers out there. He is charging a little over 2,000 in discount points for that 5.99% rate, but the builders are sometimes doing tens of thousands, which is why they're getting the lower rates.
But 2,000 in points is something you could be asking the seller to be paying. If you're a buyer.
Mm-hmm. True.
All right, so let's just flash the slide and then move on from there.
Okay. All right. Even FHA 5.49 with not too much in discount points. That's kind of exciting. Back to the article, CNBC also says that home builder stocks Lennar, D.R. Horton, and Pulte gained ground. There was some big news fairly recently with Lennar especially and D.R. Horton, where Berkshire Hathaway did a really big investment in them. And, Warren Buffett being maybe the greatest investor of all times, that has signaled to the market, he often knows what he's doing. It's kind of signaled to the market that it's, the best investor of all time is investing in housing builders. So maybe he knows something that the average person doesn't. So home builder stocks have been up. I agreed with the chief economist at Realtor.com. He had a quote in this article that is kind of redundant, but it's exactly what's going on. Home buyers grapple with lack of affordability, sellers contend with more competition, and builders deal with low buyer demand. We're seeing all of these things in our area, all of these things in our business. Article finishes by saying that some analysts have argued that buyers need to see mortgage rates in the 5% range before it really makes a difference. So like I said, we just saw conventional with a little bit of points in the high fives, and then we saw VA in the fives, and we saw FHA in the mid fives. So if they think that might make a difference, it very well might.
All right, let's do the third article now. National Association of Realtors, contract signings barely budge as buyers remain cautious.
Yep, buyers are cautious right now. Home buyers are still hesitant to commit while pending home sales remain flat, but could buyers be missing out on a prime opportunity? I have felt all this summer that we've shifted, at least into a balanced market with a little bit of advantage towards the buyers. I do feel like this is a brief opportunity. Buyers markets do not happen very often historically. But I am worried, and we'll talk about that in a minute, that the opportunity for the buyers is shrinking. But let's finish with the article, and then we'll get into that. Many home buyers have more negotiating power as listings appear on the market, but the National Association of Realtors analysts shows most buyers are taking their time before signing contracts, while pending home sales numbers have yet to turn the corner. Housing inventories are at their highest level since 2020. And yeah, we have much more inventory, obviously, than we had in 2020, and even just year over year, our housing inventory is up quite a bit.
And then we have this quote from Lawrence Yun, the chief economist at NAR. He says, even with modest improvements in mortgage rates, housing affordability, and inventory, buyers still remain hesitant. So like you were saying, people are sort of missing this brief buyer's opportunity right now.
Yeah, that's my thoughts. He goes on to say home buyers are in the best position in more than 5 years to find the right home and to negotiate for a better price. We're certainly seeing that in our business. Buyers, prices have been coming down on a lot of listings just in general. Sellers have been a lot more negotiable. They're getting some closing cost credits. They're getting repairs done. So there is a lot more buyer opportunity right now. But where I think that maybe we might be turning the corner in our business is just a microcosm of the greater market, of course, that's going on. But all of a sudden, all of our listings are now under contract. And we had listings that were struggling to sell, that were getting up there in the days on market. They weren't flying off the shelf, but all of a sudden, every single one of our listings are in contract. And I'll just tell you a small story, like of one listing in particular, nice listing in the Golden Triangle of Murrieta. We were listed 50 days on the market. Home showed beautifully. It was priced well. We were not receiving offers. And all of a sudden, after last weekend, we got 3 offers. And there was talk of a 4th offer coming in too, had we drug it on maybe longer. But 50 days on market from 0 to 3 offers, and then the rest of our listings going under contract as well. To me, that's a sign that things are picking up on the seller side. But again, the buyer opportunity, it might be waning. Lawrence Yun, he also goes on to say, he finishes the article by saying, wage growth is now comfortably outpacing home growth and buyers have more choices. Home prices have not been appreciating like they used to. Wage gains are still happening. And with properties sitting on the market longer, buyers do have more choices and they are taking a little bit longer to decide, which is super nice if you're a buyer. You do not have to make a split-second decision necessarily anymore.
All right, on that note, let's get into our local stats now. Murrieta, Menifee, and Temecula.
Okay, as always, we are analyzing single family homes only, so no condos, no land. We do these same stats every month for years, so you can go back and compare. And we are only looking at the cities of Menifee, Murrieta, and Temecula to keep things simple. We have a lot of requests for other cities in our area, but we can only cover so much. Lately, we're only doing those 3 cities. So starting with median sales price in Menifee. Month over month, Menifee is down $10,000. Year over year, Menifee median sales price is down almost $4,000, $3,950. The peak, just if you're curious, in Menifee was July of last year at $620,000. Okay, moving on to Murrieta. Same story as Menifee. We're down month over month. We're down year over year as far as median sales price goes. So month over month, Murrieta is down 2.6% or $18,500, and year over year, Murrieta is down 3.8%, which is the highest percentage of all of the 3 cities. Murrieta is down $27,500 year over year. The peak in Murrieta, I wrote that down, was in May of last year at about $727,000. So we're a little over 30,000, right around 30,000 or so off the peak in Murrieta. Okay, median sales price in Temecula, month over month. Here is our anomaly city, Temecula, which actually has been down big, so that might be why it's popped up a little bit over the previous month. Temecula has taken a big hit. But month over month, Temecula is up 3.1% or $23,500 in 1 month, and year over year, Temecula is up 0.6% or $5,000. Temecula hit its peak in February of last year at $847,500, and then in July it was pretty high as well. That was at $830,000. So we've seen Temecula's median sales price over the past couple years go above that $800,000 quite a bit, but now $775,000. We're definitely a little ways off the peak in Temecula. Moving on to closed sales, and I'm going to do these kind of quickly because Chris is starting to sweat. We are shooting our video upstairs in our home, and we like to turn the air off so we don't have the noise, but it's like 100 degrees today, so we're going to get through these kind of quickly. All right, closed sales starting with Menifee. Month over month, closed sales are down 15 homes or 10.5%. Year over year, closed sales are down 45 homes or 26.0%. So that's another stat that's in favor of the buyers. Closed sales are down. Sellers are having a harder time selling their homes. Closed sales in Murrieta month over month is down 12 homes or 10.5%. But this is our one anomaly of a statistic. Year over year, this is our only positive statistic on our closed sales stats. Murrieta is up 11 homes in 11 closed sales or 12.1%. So up year over year, but down month over month. Lastly, Temecula, it's basically flat month over month. It's down 2 homes or 2.1%. Year over year is down 9 homes or 8.7%. Moving on to median days active in the MLS, which used to be our median days on market, but our MLS is changing the verbiage on that for some reason. Moving on to Murrieta, median days active in the MLS month over month is up 11 homes. Year over year, it is up 18 homes. It's taking 18 more days to sell a home this year versus last year in Murrieta. That is tied with Temecula, which is what we'll look at next. Year over year, it's also taking 18 more days to sell a home. Month over month, it's taking 5 more days to sell a home in Temecula. So everything taking longer to sell. Moving on to active listings, starting with Menifee, month over month is down 18 homes or 4%, which is seasonal, by the way. We're going to start to see a seasonal decline in active listings. That's pretty normal. Year over year, active listings are way up 63 homes or 17%. Active listings in Murrieta continue the seasonal trend month over month, down 17 listings. Year over year, it is up very similar to Menifee, a 17.4% or 58 more active listings in Murrieta. That again is year over year. Lastly, active listings in Temecula are down 53 homes or the largest decrease increase of 11.2%, and year over year, active listings are up 104 homes. So buyers have more homes to choose from, and that's why they're taking longer. Last stat we look at is number of new listings, starting with Menifee. Month over month, new listings are down 44 homes in Menifee. Year over year, new listings are down 47 homes in Menifee, or 23.3% fewer new listings. Month over month in Murrieta, new listings are down 15 homes, or 9.9%. Year over year, new listings are down 12 homes, or 8.1% in Murrieta. Lastly, Temecula, month over month, number of new listings is down 54 homes. Big drop in new listings in Temecula. That is a drop of 31.8% month over month. I would say that's definitely a higher than seasonal decline. So new listings might mean that our inventory will start to shrink, assuming that the active listings go through. A lot of sellers have just decided, actually, we've had a couple listing appointments recently where we told the sellers, here's what we could get for your home right now. They didn't like that number. They said, maybe we'll wait till next year, maybe the spring selling season when we'll be able to get the price that we want. We're seeing that that is a thing right now. We're always honest with our clients about pricing. It doesn't do anybody any good to market an overpriced listing. So we'll always shoot you straight on the pricing. Year over year, new listings in Temecula is down 19 homes, or 14.1%. And it looks like months of supply is ranging around 4 to 5 months of supply. So definitely getting toward, still in the balance to buyer's market range. It's kind of shifting into the buyer's market range. Once you get 4 or 5, definitely 6 months of supply is a pretty strong buyer's market. So still good for the buyers, but we'll see how it goes now that the interest rates are coming. Actually, I will just wrap it up with saying that there is a lot of sentiment in our industry. A lot of people that are in the know are saying that they think that we've turned the corner with the shift. With these jobs reports, with the rates coming down, it's going to be interesting to see what happens. But people think that, there's just been this dam of pent-up demand, and that we're starting to see holes in that, and that the motivated sellers are going to be back, the ones that have the 3% interest rates. Now that they're going to be able to get a lower interest rate, they're going to list their home. We're going to get more inventory. All these buyers that are on the sidelines are going to come back in. I'm hearing that a lot right now. Is that going to come to fruition? Time will tell. Hope you enjoyed this market report. Let us know if you have questions. Bye.